Hey everyone, Markeisha here with your weekly market update. Now, I know what you're thinking. Another government shutdown. Yep, and this one is playing hide and seek with our economic data. Now, the government shutdown has come with a lot of drama. But here's the deal, and here's what you need to know. The government shutdown has put a pause on some major reports, including the Bureau of Labor Statistics, September's job report, and also the weekly unemployment numbers. Now you're probably wondering, why does that matter? It matters because the Fed used this data to decide whether to raise, cut, or keep interest rates steady during its next meeting, which will take place on October the 29th. And right now, the Fed is kind of like that cousin who can't decide what they want to eat. Now, inflation is still too high, but the economy is showing signs of slowing down. In the meantime, the ADP Employment Report is taking the spotlight. Now, normally, this report is like a supporting actor, but this week it's the star of the show, and here's what it has revealed. The U.S. actually lost 32,000 jobs in the month of September, not gained. That's a big miss from the expected 50,000 job increase that we were expecting. And get this, 7 out of 10 sectors reported job losses. Even August numbers are not so good, but changing from 54,000 job gain to a $30,000 job loss, well, let's say the labor market is not exactly crushing it right now. Now, if the shutdown continues, it could delay even more key reports, especially the ones related to inflation, which the Fed watches super closely when they're deciding whether or not to make a move regarding interest rates. Now, the Fed's flying a little behind right now, and when the people who set interest rates are guessing, we can expect a little bit of roller coaster ahead. So, we're not sure where rates are going to go or where they're headed right now. Now, in real estate, signed contracts on existing homes rose more than expected in the month of August, and that's probably because of mortgage rates going down. Now, since rates have been trending lower since July and have fallen more in September, that could mean stronger buyer activity heading into the fall months. Meanwhile, home prices, according to Case-Shiller and the FHFA, are still up year over year, but the growth pace is slowing. So prices aren't skyrocketing like they were, but they're still holding steady. If rates keep dropping, we can see buyer demand heat back up real quick. And yet, that means prices could start climbing as well. So here's the bottom line. The economy is throwing us a few curveballs, but the opportunities are still out there, especially for buyers who are ready to make the next move before the next wave hit. So if you're ready to buy, don't wait. Get in the game now. And like always, let's make your next move legendary.